Hello, everyone. Today we're going to do something a little bit different. We're going to be talking about financial planning and managing your money by creating a budget. This video came about because of a conversation that I had with one of my girlfriends. She mentioned that she wanted to hire someone to pay her bills, and I just thought that was very interesting. So I asked her just a little more information and then offered to help her because I enjoy personal finance. I enjoy creating a budget. I'm not a financial planner, it's just something that I've had to do out of necessity throughout my life. So, in this video, we're going to talk about her current situation and come up with a plan for her to reach some goals. So, enjoy, stay tuned, and if you have any suggestions that are actionable and doable, leave them in the comments section. Welcome to Teresa's New Dawn. I'm here to show you that this stage of life is full of endless possibilities, whether it's traveling solo or simply finding joy in the little things. Let's dive in. I asked my friend to send her information to me, and this is the Excel spreadsheet that she sent. To give a bit of background on her, she is a single woman in her early 40s. She works a full time job, and she also has a consulting business that she runs. And then she has the Passion Project, that is a business that she is trying to um, create and evolve into an income generating business. So you'll see the information for those two things and her personal income and expenses on this spreadsheet. Before we do a deeper dive, I want to give a disclaimer that I am not a financial planner. I don't have any type of training in finances. What I rely on is the knowledge that I've gained over my lifetime. I've learned to create budgets to get myself out of debt and really just to manage credit card usage. So that's what we are going for. I also want to share the goal for these series of videos is to not only help my friend embrace how to manage her own money, but hopefully this will help the viewers, anyone watching these videos, to learn that money is not something to be feared. If you take the time and create a budget looking at how much money do I have versus how much am I spending, you'll realize that it's okay to embrace money management. So now we're going to take a look at the numbers on her spreadsheet, and I would like to ask that keep in mind that it took a lot for her to be vulnerable to share this information with me. And if you add comments, please be kind and provide actionable comments that we can use to work forward because we're looking at doing this for a few months just so that I can help her progress. So, as I looked at the numbers on the sheet, one of the first things I look at is income. Like, how much money are you actually bringing in from your personal work and then also from the business and the passion project? How much money are you bringing in? So, as we can see, her average income is going to be around $7,000, $7,500. There may be months where she earns more because she does some extra work, or there may be months where she earns less because she decides she doesn't want to do any extra work. But then I looked at the expenses for the business. And one of the things that quickly came to mind is that she's got a lot of credit card debt at high interest rates. So that jumped out at me. And also, she's paying bank fees for two accounts. That's something else that jumped out at me. I noticed the bank fees can sometimes be a quick fix for you when there's probably require a minimum balance or something to avoid the fee. So that's something I would speak with her about. And again, looking at she's got some life insurance that I would talk with her about. Is that really necessary? And also some income tax debt. Now, for the purpose of this series, we're not going to talk about the income tax debt. We're really just going to focus in on looking at some of the credit card debt and how to reduce that, and then creating a workable budget for her. So I just wanted to make that clear. One thing I've started pointing out to Jay is the credit card debt. Um, some people don't realize the importance of being aware of your interest rates and how they work with your debt. I created this table because I wanted to give her a visual of what she's actually looking at. In the past, I was a person that I didn't mind carrying credit card debt. It was common for me to have $5,000 and think, oh, it's not a big deal. I make X amount of dollars, I've got more than enough to cover it. And then as I gotten older, I realized it's better to not have credit card debt, not debt that you carry month over month over month. It's one thing if charge $500 a month or $1,000 a month and you're able to pay that at the end of the month or at the most within 2 or 3 months, but you don't want to have a high balance at a high interest rates that you're just kind of paying the minimum and you are carrying that for years at a time. This table kind of illustrates that, and I'm just going to use the very first card. I've sorted these by interest rates. She's got about a $5,000 balance. That credit card has an interest rate of almost 36% with a minimum payment of $244. So if she only pays the minimum after she's paid the card off, she will have paid a little over $7,000 on that card. And where that comes into play is one of her goals is to eventually buy a house. And if you cannot buy a house having this amount of credit card debt because when they pull your credit report they're going to see it, but you also want to show yourself that you'll be able to manage running your household and whatever expenses you have. So this is one of the reasons why I think credit card management is a key item that we'll talk about in coming months. So I wanted to share that here. After reviewing Jay's information, I did ask her what 2 or 3 goals she had that she wanted to come out of this. And for her, she wants to pay off the debt and she wants to buy a house and basically make it so that her businesses are generating enough income where she doesn't necessarily have to work full time. And then when I shared with her the goals that I have for this, is really to help increase her knowledge of money management so that, as she makes more money, she'll know how to manage the additional money. And if her goals shift, she'll still know how to pivot and use the money that she has to meet those goals. I wanted to point out that if you are consistent and disciplined, you can get out of credit card debt. So I don't want anyone who may be in a similar situation and watching this to get overwhelmed. I think the key is just to be honest with yourself, look at how much money do I make, what money is going out, what are my expenses, and just use that as a starting point to decide what kind of changes you can make. And in Jay's case, I did want to point out that some of her tax debt is due to the consulting business that she has does not take taxes out. So it's up to her, again, to be disciplined and to remember to send in those quarterly tax payments. And that's something that, we'll work on as this project progresses.